the big thing about working at a financial institution like an investment bank is that you mature very quickly. I think that there is a degree of like mental maturation that you do there in that type of role where it's very demanding, it's quite high stress, there are very high expectations. It's oftentimes unrealistic, but they're just very high, and you have to do the best that you can to manage those expectations. Those are opportunities that really don't arise anywhere else.
This is Net Learnings, the podcast that keeps finance and banking professionals ahead of the curve. In each episode, we focus on career growth and practical advice while mixing in the occasional war story. Join us as we tap into the minds of leaders and experts at some of the world's most notable financial services firms and enterprises. Let's get started.
Hello and welcome to Net Learnings. I'm your host, Kyle Peterdy. I'm really excited to introduce today's guest, Meeyeon Park, VP Content here at CFI. This is actually a first of its kind, hosting an internal guest, which is kind of cool. Meeyeon, thanks for joining me.
Of course. I'm super excited because we just haven't done these internally yet. So it's very exciting to be the first guest.
Maybe we'll set some kind of a precedent. That'd be awesome. So for our guests, if you don't already know Meeyeon, she has quite a breadth of experience across a number of finance roles. She's been on the buy side, the sell side, and she spent several years with a corporate as well. And for the last 3+ years, she's been leading the development of curriculum here at CFI across our capital markets training. And most recently, Meeyeon played a lead role in launching our financial planning and wealth management certification program. She's also a lot of fun to work with.
I like to think so too.
Absolutely. Meeyeon, we'll get to all of that. Maybe we can start sort of high level. I really like the way you break down the buy side and the sell side, in particular investment banking. I think you do an elegant job and kind of bring like an educational lens to it. So can you start there for our listeners? Like, real easy question. Tell us how the capital markets work.
Yeah, I guess so. Very, very high level. When you're working in capital markets, it's a exciting job in the sense that it's in financial markets, everything is constantly moving. But if I were to give a sort of interview question response to where capital markets, I'd kind of break it down into 3 components. I'd say that capital markets are financial markets that bring buyers and sellers together to trade anything from all sorts of asset classes like stocks, bonds, commodities, currencies, and other various financial assets. Of course, the most well-known asset classes, the simple ones, are stocks and bonds. But what capital markets also does is that it helps people with ideas, people that are entrepreneurs, bring those ideas to fruition, to life, into companies, and it helps small businesses grow into larger ones by doing IPOs, whether they're equity or debt.
I've always found it interesting. I think there's this like myth out there that once, like, especially for people that are junior in their career, but like once you get into financial services, all of a sudden you just kind of get it. I don't know about you, but that's certainly not been my experience. Like, I know commercial lending really well. And I also have a good sense of like what other folks at a commercial bank or credit union do, whether it's like the retail division or wealth management. But the reality is like there are just so many areas of financial services and finance sort of more broadly. Like, I don't think anyone's really an expert in all of them. And so I find it fascinating to hear you talk about your career, because what goes on behind the scenes at an investment bank really is a mystery to me. And so, like, am I totally off base? Maybe you're an expert in all of these areas.
No, I think I think that's a very true statement. I think capital markets is just generally an incredibly non-linear industry. I wouldn't say industry, but like sector. It's not an easy place to learn steps A, B, C, D in like a sequential and logical order.
Totally.
So when you go into an investment bank, the whole thing is it's not just like there's going to be this one cookie cutter role, the one that everyone knows, the role of an investment banking analyst. It's like the reality is that an investment bank is a big institution. They offer various different lines of services, and within each of those pockets is a developed expertise that tends to be kind of deep and narrow. And so it's never going to be the case that you work there for a year and know it in and out. It's going to take several years for you to figure out not just your role, but the significance of it in a broader investment bank's operations. and to really understand like how that machine works, like how the sell side works.
Yeah, and I'm glad you brought up sell side. I interviewed a hedge fund trader a while back, Rob Polkes, and he mentioned that buy side entry level is really tough, but you did it, and then you flipped over to sell side, IBD, investment banking division, which I think is a little bit of an opposite route. Could you maybe walk us through that process? Like, why did you go that way?
Yeah, that's like that's a really great question. It's a common one that like I haven't been asked very often, but more so like today than a number of years ago when I was younger. But for me, I tend to not do a whole lot of reflection in the past. I'm usually kind of like focused on moving forward, and luckily there's lots of exciting things ahead of me. But that question is really interesting because it does require me to do a bit of kind of like reflecting and introspective reflection. So when I started, my very first internship was on the buy side. It was with Brookfield Asset Management and their specialty funds group. They were just launching, they were doing fundraising, they were doing marketing, getting all their investors together. And then after that, I went to Ontario Teachers in their fixed income portfolio management group. And that's where I got like a real taste of, like traditional buy side front office type of role. And so for me, I started from the buy side and went to the sell side, not because of anything special, except for the fact that that's where I just happened to land my first internship and made some really, really great mentor relationships and had that bridge connected for me. But it's really interesting to say that it is so tough because people probably have the impression that it's much tougher at an investment bank because you always hear about, oh, there's like so much work to do. There's so many hours. Everyone's so demanding. You hear all of these big sort of very, not exaggerated, but these really, really big stories. And they mainly come from the sell side. But I think that it's really accurate to say that it is quite tough on the buy side. And I would say more so than the sell side. And it's just by virtue of the fact that when you go into a buy side shop, typically you're not going in with a big group of new hires. So whether you're coming from an MBA program or any sort of graduate degree and going in as an associate, or you're going in right after undergrad, there's no real such thing as like the
like
analysts. Yeah, there's no analysts of PIMCO class of 2023 type of thing.
Okay. That's a sell side, like that's a sell side.
It typically is because
mechanism?
on the buy side, when you hire analysts and associates in, you don't hire them in high volume. You typically have people that are interested in the career very long term from a very early stage. And the nature of the work does not require 20 or 30 analysts. And so because of that, you end up going in more or less alone. And you go into an environment where you're typically supporting maybe like one or two portfolio managers, and there's no kind of training. There's mentorship, but it only works out if you and the person that you're reporting to develop a great relationship and happen to get on very well, and they want to be in that kind of mentor type of role. And so you don't have the kind of social resources, and it's very challenging in the sense that they just don't have the programs that the investment banks typically have, where they take 20 or 30 analysts in from undergrad. They take 20 or 30 analysts in from the associate pool, and they have these massive training programs that last a week or two during summer, get everyone acquainted with each other so that you can have people to lead on and learn from and just have this camaraderie with. You generally don't have that on the buy side because they just don't have the type of work that requires a high volume. They have very low turnover, and so it's not like they're taking in tons and tons of people, expecting tons and tons of people to leave.
Which is the case in the sell side investment banking type roles.
Generally,
right? People
with
tend to churn out.
I think that the industry has probably changed quite a bit since I was in 10 years ago. But if you have like a group of 10 analysts, I would say like at that point, like 5 of them would leave by the end of the year.
Oh,
so
wow,
you would
that
get
quickly.
Yeah, because at the end of your first year, you have, from like a PE firm's perspective, like enough experience that they would want to hire you as a second year analyst. You'd be well prepared and easy to onboard. And they like to kind of pitch the enticing idea that, your work-life balance is going to be a little bit better. It really is not. I think it's very similar.
Right.
But after the first year, people typically, at least, 10 years ago, felt a little bit of burnout and expected that the next year they would be doing very similar things. And so when a recruiter comes knocking on their door and says, I have this great PE opportunity, they were usually very quick to jump on it.
Yeah, the grass is greener kind of idea. Interesting.
Yeah.
You'd mentioned how they don't normally take in big cohorts on the buy side. I find that really interesting and I guess intuitive now that you say it. Would that be true at like a BlackRock or some of the really large firms? Or
Yeah. So for me, I'm only familiar with like the Canadian asset managers, and we're a lot smaller than like the US and global ones. I would assume that like BlackRock, at a place like BlackRock, it is larger, but relative to the bulge bracket banks, it's still significantly smaller.
right.
Like
So-
I very rarely see on campus recruiting asset managers doing huge intakes from top universities there.
That's interesting. So if you are fortunate enough to find your way into, something close to an entry level role on the buy side, would you say that it's more important that you come prepared with technical skills than, say, an investment banking role where they're going to put you through kind of the ringer of training?
That's a great question. It's in the most ideal world, yes. I think
Right.
the buy side, well, generally, I think from what I've seen, the buy side will they prefer to hire their investment analysts. So the one that would support their portfolio managers or assistant portfolio managers from master's degree programs, and typically ones that are quite focused on finance, like a master's of mathematical finance or financial engineering, or something that has clearly given them the opportunity to at least academically study what they're about to do. Buy-side shops, I find, generally prefer that because, as you said, they're not generally prepared to give you a huge onboarding and a how-to of everything.
Got it. Okay.
Wait, did I answer that?
Really,
Did I answer that question? I think there's a second part I didn't answer.
No, that's good. That's really, really interesting context to hear it directly from someone who's been there. So, okay, obviously, when you talk to folks that are young in their career, it's always so sexy to like, I want to be an investment banking analyst. And you did that. It's sort of a two-part question. Can you tell us a little bit about what does a day in the life look like for an investment banking analyst on the sell side? And I guess specifically, how is it different in DCM or ECM or like M&A? If you could kind of break that down, would be super helpful. And you were in debt capital markets.
Yeah. So for a day in the life of an investment banking analyst, it can look very different depending on where you work in the investment bank. And I think that over the decades since I've been there, they've probably rebranded the title. I want to say I typically see like capital markets analysts now for the capital markets roles. They report, of course, into the investment bank, but what you do as a DCM or ECM, a debt and equity capital markets analyst, is like fundamentally different than what you would do as a classic industry group analyst within the investment bank, which is also categorically different from what you would do if you were an M&A analyst. And so
sorry, can I pause you there? I'm just curious, when people talk about, I want to get into investment banking, which of those four categories is it they're typically talking about? The traditional?
They're always talking about the classic industry group banking roles. So whenever someone's just saying like, oh, like my dream job is investment banking analyst, they're always talking about the classic industry group one or the ultimate one, the one where everyone wants to get started, which is M&A.
Okay.
And
that's helpful. Thanks.
Yeah. So like when you kind of think about it, if you look at an investment bank and I won't like verbally go through like a whole org chart, but imagine like there's IBD, which is industry group coverage teams. There's product teams, which is M&A, DCM, and ECM. And I say product because M&A is a product. So if you're an M&A analyst, you're going to be looking at only M&A deals or potential M&A deals across various different industries. So it doesn't matter whether it's media and telco or oil and gas or pharmaceuticals, you're looking at just M&A, and that is your area of expertise. Your expertise is that product, which is M&A.
Okay.
DCM, ECM, same thing in the sense that it's asset class specific. So if you're in DCM, your specialty is bonds, and it doesn't matter what industry or whether it's government, it's just bonds, bonds, bonds. Same thing with equities. Whereas in industry, you're focused on getting to know an industry altogether. And when one of your clients needs financial advisory services, you'll talk about what the solution that they're looking for is, and if it's a product related solution, which it will be, you'll bridge the gap to your M&A colleagues or your DCM or ECM. And so the day in the life of DCM is very different in the sense that, so if you are in an industry group coverage team, your team is the relationship manager for all of the companies that fall within your industry. So for example, media and telco. If you are in the investment banking classic division and you are part of the media and telco team, you would be responsible for managing the relationship with Verizon, AT&T, Rogers, TELUS, all of these types of companies, and of course depending on whether you're in the US or Canada.
Elsewhere.
Or elsewhere, of course. But your managing director is responsible for maintaining and procuring and developing a relationship with the CFOs of that company, CEOs, and making sure that, when they do need some financing solutions, you're that first call. Now, with DCM and ECM, what's interesting is that they're not the relationship manager, but they're always going to be pulled into the conversation. And they might have relationships with more realistically, like the treasurer. That's the person that they're going to talk to most frequently. They may also have frequent conversations with the CFO, but it depends really on the dynamics of your firm and how the teams operate. So a DCM or ECM team is going to have a very close relationship with their peers in industry group coverage so that they can make sure that, when a client comes in and needs financing solutions, it does seem like it's a whole team that's helping you get your whatever you need done. And so the interesting part of a DCM analyst, I want to try and give a good, accurate day in the life. So
let's do it.
So with DCM, you're not market facing directly in the sense that you don't actively have a pulse on markets because you're trading securities every day. But you do need to have a really good pulse because of all the clients that you work for. They are going to be looking for bond solutions, and you want to make sure you're always up to date on fixed income markets. So while you're not directly market facing in the sense that you're not active in capital markets, you're not trading securities day over day, you are day over day keeping up. So that means that you would start your day by listening to the morning call from sales and trading, as well as reading up on any overnight markets, and really just listening to any type of resource internally so that you can get a pulse on what the markets are doing. Now, that is kind of the most market-facing component of the job. The second part of the job is more similar to a kind of industry group coverage team role in the sense that you are going through your clients' debt financing solutions that they currently have with you, looking to see if there's any opportunistic fundraising that they could be doing, and really working with syndicate as well as the industry group peers to see where you could be effective. So the role is almost half and half. Physically, origination teams don't sit out on a trading floor with their sales and traders because you don't want to, it would be, well, it's not allowed for regulatory purposes because
it's not even allowed
can't flow like that. Yeah. But in theoretically, you fit kind of right in the middle. You're not live on the trading floor, but you're also not tucked away in an industry group role focusing on kind of project-oriented things. You're looking at very specific bonds, you're looking at specific clients, you're looking to do things that are more transactional whereas your industry group peers are doing things that are much more long-term project-based, bottoms-up analysis. So the role itself is very much like straight in the middle, and so is the kind of work that you do as well as the work-life balance that you have. In sales and trading, yep.
No, would this be like a mirror image on the ECM side as well, just dealing with equities instead of fixed income?
Yeah. They're very, very similar roles, just different asset classes. And the type of it's funny because it's like the type of personalities as well as the type of work-life balance and lifestyle is very similar in the sense that it's right in the middle of the sales and trading team as well as syndicate versus your industry group coverage peers. The origination team really lies like very much in the middle. And
so if they're in the middle in work-life balance, who has the worst work-life balance?
Well, I would say it's probably no secret that the industry group coverage teams have the worst work-life balance.
Okay. Yeah, they're spending a lot of time, and they're the spreadsheet folks. And
yeah, so a lot of their the junior roles will be focusing on things like updating models, for example, if there's like any sort of corporate earnings release, like any sort of newsworthy events, updating comparables, updating scenarios that they might pitch to certain clients. That's a lot of the work that'll be done by a junior investment banking analyst. It's really maintaining a lot of different like databases, updating different pitch books, and assisting your associate with whatever may be requested from a client at any given time.
Okay.
And so that tends to take quite a bit of time because at the end of the day, when you're dealing with people that are kind of like C-suite executives, whether it's a CFO or the treasurer of the company, they typically have their day-to-day, and then they follow up at the end of their day with a lot of the stuff that they would like from an investment bank's services.
Got it. Okay. Well, remember earlier I said you have a really elegant way of explaining it. I do really enjoy that. Meeyeon actually has a course as well, Introduction to Capital Markets, which goes into some level of detail on this stuff. If you get a chance to check that out, I highly recommend it. Okay, so obviously at CFI we have hundreds of courses. So I'm going to ask you, this might be a tough question to distill it down, but for someone that wants to go into origination, like you did, we'll call it DCM, but they can only take 3 courses, only take 3 CFI courses. Which 3 would you recommend that they take?
So it's going to be 3, but it's kind of like 4, but that's because it's origination broadly. So with origination, you could either originate debt or equity. So the first 2 courses I would say are Introduction to Capital Markets to give you a good lay of the land, and then Origination Fundamentals, which really goes into kind of day in the life of DCM, what you do there. And it goes into great detail. Basically, it was my regular day for 3 years.
Okay.
And then based on whether you find DCM more interesting or ECM more interesting, I would say like our credit fixed income course would be a great one, or the equivalent in equities.
Okay. That's a fair answer.
Those are the 3 courses that I would take.
I thought you were going to cheat with 4, but you kind of went and just forked it off. So
3 sub A, sub B.
No, I like that. That's good. That's awesome. Let's play a game.
Ooh, yes. I love games.
All right. So always trying to find new fun ways to engage. And you are a very seasoned finance expert, but you didn't work in commercial lending. Or did you? Did I miss anything on your CV? Okay.
No. My secret life as a commercial lender.
So I have an idea for a game. It's called Lender or Liar. All right. Here are the rules. I'm going to give you a list of like a word, a term, or an acronym. And you have to decide and tell me if it's a real word that's like common in commercial credit or if it's made up, if I'm a liar.
Okay.
Okay, you can handle it?
Yeah. Let's go.
All right. General sorority agreement.
Lie. Lender or
easy.
liar, that's a liar.
Yeah, that was a liar. Yeah, no, definitely. General security agreement is one. That was an easy one.
GSA.
The other GSA, a general sorority agreement. Yeah, definitely made up. A suspension of claims.
That sounds real. Lender.
That's fake. That's made up.
Oh no. Is it?
Yeah.
Is there something that's like related to it that is real?
Sometimes sometimes people will sign what's called a subordination of claims.
Mm-hmm. Oh,
Yeah, it was close. It's close. It's close. All right. This one's an acronym. EBITDA.
Oh, that is real.
That is real. Do you know what it is?
Yeah. Earnings before interest, taxes, depreciation, amortization, and what was it?
Plus rent.
Plus rent. Yes.
Yeah, it's used in some types of credit underwriting. You would add back
I know
rent
it's real
for a
because
variety
I've
of reasons.
heard
It's definitely real.
EBITDA, and I just remember the first time I heard it, I just thought, oh, like this person is joking.
No, it's real. That's a good one. That's good. Unaccrual loan.
Unaccrual loan? I'm going to say that is a lie.
That's correct. Yeah, that's a lie. It's actually a non-accrual loan. Non-accrual is a real term. How about gets into, well, okay, I won't give you any clues. ESA. It's an acronym. Environmental Social Assessment.
I think that's right. I think that's not right, but I think that's true. That's a lender.
An environmental social assessment? They have
Yes.
different phases, phase 1, 2, and 3.
But it is a real term, I think.
ESA is an environmental site assessment. I got you on the ESG workaround there.
So close.
So close. I haven't been keeping track. I don't know what your score is, but you're doing really well, actually.
I think I got 2 wrong so far.
Workout.
As a term in commercial lending, it seems like it could describe a process, but I don't think it is. So I'm going to say it's a lie.
Is it? No, it's real. It's a real term.
A workout?
So yeah, a lot of it may be called restructuring or special loans, but when a problem file needs to be resolved, it goes to the workout group for them to work it, basically. It's a really common term in the U.S. actually. Workout. Yeah, there you go. Problem loan workout. Okay, one more. I got a whole list here. a camel's rating.
A camel's rating?
CAMELS is an acronym.
Oh. I'm trying to think. It's like Moody's is in there. S&P is in there. DBRS is Canadian. It's not in there, but I'm going to say it's a lie.
No, it's a real thing too.
Oh no, I'm like 50-50 at this point.
Yeah, he came out
What
of the
does it
gate
stand
pretty
for?
strong. CAMELS is a rating system developed in the U.S., like a supervisory rating system to measure the condition of a bank's like loan portfolio. So it stands for capital adequacy, assets, management capability, earnings, liquidity, and sensitivity, I believe.
Oh,
That
so
is
it's
your- that is CAMELS.
AMOLs. There's 2 A's in there, right?
No,
Oh,
assets.
did I miss it?
Oh, capital adequacy is like the C.
Ah, I see.
Yeah. So that was a tough one. That was pretty good though. That was fun. I like that game. I might use that again. Thanks for playing along.
That's fun.
Did you ever work anywhere where they had like a fun ritual or tradition or something like that? I ask because I feel like the pandemic kind of stifled fun in the workplace. I don't know how you feel about that, but particularly like with financial services firms and big corporates, I think it'd be cool for people to be able to like bring some of that back. Do you have any cool traditions?
Well, I think a tradition that I think every group on a trading floor has is when the non-farm payrolls come out, so it's U.S. employment numbers. You kind of want to get, some people do like closest to the actual number, or they'll pick a number and do over under.
Okay.
So it's a fun little monthly thing, and we usually just like say the loser of the group will have to get coffee for the team members, and you don't want to do it for the entire trading floor because that would be a lot of money. That'd be like
It'd be
several
expensive.
$100s, but
Right.
you're within your sub team of like 4 or 5 people. That's always a fun little tradition. It's a little cheesy, but it's always fun.
No, that's a good one, actually. I like that. You mentioned trading floor while we're on the subject. You kind of hear about like the culture, and I'm sure it's evolved over time, but like what is it like, or what was it like being on a trading floor? Even though in origination you weren't there all day, like what's the vibe like?
So it was really interesting because for me, I actually was on the trading floor. I wasn't actually behind like some sort of glass door or separated far away. I actually was on the trading floor. We sat not facing the sales and trading team, but I did get to experience it in its kind of in the closest form possible. The best part of being on a trading floor is just the energy. It's always fun. It's always kind of different yet the same. So for example, if you're in sales or trading, you're looking at the same set of securities every day. If you are in derivative sales, or if you're in fixed income sales and you cover certain asset managers, you're kind of looking at the same list of clients every day. But each day brings like a different type of energy, and you really feel it throughout the day. So everyone is, quite boisterous. It's a bit loud, but it's really energizing. It's not necessarily for everyone. I mean, I remember the very first time I went there, it can be very shocking if you're going from the buy side. So the thing...
right, yeah, you went the other way, that's right.
Yeah, like the thing that Rob said about things being difficult as a junior kind of entry-level investment analyst on the buy side, one of the things is that it's very quiet there. And like everyone is usually, quite focused on their work. And there is no like hum of a trading floor. There's no one kind of like yelling things across to their trader. So it makes it it can make it a bit awkward to be more vocal. But on a trading floor, it is just it is the nature of the work. And the information passes very, very quickly. One thing that you'll always hear people say is, oh, you could learn by osmosis. And it's exactly how it is. You get to learn so much from so many different people on the trading floor, whether it's a salesperson or a trader in their various different asset classes that they trade. So it's really nice to have that environment. And I don't know how the pandemic has impacted it, because I've been away from it for so long, but I can't imagine a work from home situation for a bank on their trading floors.
I wonder what that would look like.
It would take there's a lot of the certain traders require a lot of screens. It's a lot of electricity,
right.
And it's a really big setup. So I just can't imagine doing that from home all the time. That's one thing. Just physically, I think the infrastructure is not really something you could set up in someone's living room right away.
What inspired you to flip over into education, if you don't mind my asking?
This is an interesting piece, and some of it was just it's what found me, and not necessarily that I went looking for it. So CFI is based in Vancouver, and when I joined, it was a fully in-person environment based in Vancouver, and everyone came to the office kind of every day. So when I was what happened was I was working out in Toronto still. I was working for a large Brazilian private equity owned company, and I wanted to move back to Vancouver because that's where I'm from. But at the same time, the kind of capital markets experience that I had was not necessarily going to be something that I could pick up here in Vancouver very easily.
Much smaller city, right?
It's much smaller. So for example, if you're at a major Canadian bank, whether it's RBC, CIBC, BMO, TD, the jobs that you're going to look for in capital markets in the Vancouver location are very few and far between, because everybody wants to work in Vancouver. It's the weather is nicer. I think the city is the best in Canada, and once someone lands that role, they never leave. And so when I came here, I kind of started to just broaden my horizons and say I'm kind of looking for a high growth, relatively kind of startup-ish company, maybe a couple years in, at least financially stable. And then I found CFI. And
or it found you?
Or it found me, yeah, through the Google algorithms. But I noticed that they were looking for things that were very much in my background, but it wasn't the role itself. And so I've always enjoyed the idea of teaching, in the sense that I've benefited massively from having met the right people at the right time in my career, and having those people take a really great interest in me and helping me find and open new doors and new opportunities. And so I was really grateful when I found this, because I benefited so much from people helping me in my life and taking an interest in me as a mentor. And I felt like this was a great way to kind of give back on a mass scale.
It's like a way to scale up mentorship in a way. right? Instead of working with like one person at your company, you can really deliver a lot of value to a lot of people.
Yeah, because a lot of the learnings that I've done, for example, even just like finding my first job in origination and understanding what that was, it wasn't even a part of people's vocabulary when we were graduating. The only terms that I heard were, I want to be an investment banking analyst. And you never hear about origination. You never hear about ECM or DCM roles. Learning that kind of stuff, like I just find that there's so much more opportunity than people initially think there is. And to be able to share that on a wide scale, I thought that was really exciting.
I think we do, well, I'm a little biased, but I think we do a pretty good job at CFI of sort of demystifying financial services, because it is, like I said earlier, like no one's an expert in everything. And historically, it's been fairly opaque. Like there's not that much information out there about like what someone does. And I did a lot of coffee chats over the years, and I kind of consider these interviews to be something of like a virtual coffee chat that a lot of people can tap into. I had a guest actually talk about that once, and I tended to agree with them. It's like, what do you do? How do you do it? So it's been fun to be able to just hear about a day in the life of all these different roles and to be able to share that with our learners too.
Yeah, I mean, like, for example, when I graduated, there was no such thing as like podcasts like this, right? Where you could really just be a fly on the wall of people's coffee chats. Yeah. I went out and I bought a book. I bought a paperback book.
Do you remember what it was called?
I do remember what it was called. I think it was called Breaking into Bay Street, which is the main kind of corridor of where jobs are in Toronto.
It was a podcast before podcasts existed. It was the only place to go get the information.
And I just remember thinking, now that we have all these resources, it's just so crazy how accessible everything is these days.
Yeah. Do you have any general career advice for our listeners and our members? I mean, you know our target audience as well as anyone.
One of my big things is like one of my first bosses in origination, he said something that's always stuck with me, was, especially right when people join, he's like, I think it's so remiss to kind of get this opportunity that is really hard to come by, because there's just, at the end of the day, it's not like the role is like so amazing and so glorious that everybody wants it, but like the hardest part is that there are very few seats available. And to come in and do 1 year and then just bounce out the door. Like, he found that it was very short-sighted to think that, the grass is greener on the other side. I just kind of want to work hard for a year, and I think I've learned everything that I need to here, and then just bounce to another opportunity. And the idea was that, or at least the way that I kind of received that, was there's nothing that is worth learning that you're going to learn within 12 months at a place like an investment bank. There is so much more opportunity and so much more learning and growing that you could do in that role that is really hard to come by anywhere else. And to leave it in such a short time frame, you're not getting everything that you could from that. Like, for me, the big thing about working at a financial institution like an investment bank is that you mature very quickly. I think that there is a degree of like mental maturation that you do there in that type of role, where it's very demanding, it's quite high stress, there are very high expectations. It's oftentimes unrealistic, but they're just very high, and you have to do the best that you can to manage those expectations. Those are opportunities that really don't arise anywhere else. And I think it makes you a much more mature professional in that 3 years of experiencing that type of work environment than you could working 6 years in general corporate. And I think it's a really unique opportunity. And that's one thing I would say is, like, even if there's something that you are working so hard for and fighting so hard for, like going into an investment analyst role at a top tier asset manager, or going into an investment banking analyst role at like a Goldman Sachs, if you're fighting tooth and nail for that, like, you want to really ride out that opportunity, try to get your first promotion and get as much as you can out of that role. If they typically they want you to stay in the role as an analyst for like 2.5 years, and then they either promote or let go of you after 2.5 years, they typically put those time frames in there for a reason. And I think one of them is that is when you will mature professionally in that role, as well as like mentally in that role, so that you can be prepared for the next stage. And I think it's really important to kind of understand that nothing that is difficult to come by is something that you should let go of so quickly, even when it turns into challenging times.
Yeah, that sounds like really, really good advice. I've had other guests talk about patience and role as well, and how
patience
part of it's,
is
I think, a generational thing.
Yeah.
But yeah, like just don't look to move all the time. You're also not really endearing yourself to the folks that hired you or to the organization, particularly if you're going to stay internal and swap somewhere else. It's just, you don't be impatient, soak it all up. I had someone else say that, deals are kind of like movies. And if you see enough of them, you start to get a sense of how they're going to end, and it takes time to get there. So yeah, good advice. Interesting. Okay. I'm curious, you always hear these stories about, crazy interview questions when you're trying to go into some of the really high profile roles like the management consulting and IBD.
Yeah.
What was the toughest interview question that you've ever been asked?
So here's the funny thing is that I did 2 interviews for the classic investment banking analyst role at the main Canadian banks, but I was never asked any of those weird questions, like how many golf balls do you think could fit in a Boeing 757, or how many golf balls do you think could fit in Central Park? Like all of those questions.
I think so many. Who cares? So many
golf
right?
balls. I think a lot of the at least like when I interviewed, I really enjoy interviews. I think I had great conversations with those people. I made it to final rounds for both of them, but I didn't get selected for that one. I ended up in origination anyway, so that doesn't matter. But I guess it kind of also depends on the candidate that they're speaking with. They might kind of swap up some of the questions. Yeah. But I've heard a lot of those questions. I haven't actually had to answer any of them myself. But like the whole purpose behind it, I think it's like some of it's a little bit mean, especially to someone that is coming straight out of university, very bright-eyed and bushy-tailed and a little bit nervous. But the whole idea is that they just want to know, how do you approach abstraction? How do you structure your thoughts? And that's all that they want to hear. So, if you don't know Central Park, you could just say, well, I've never been to New York, and I have no idea the scale of Central Park. But I do live in Vancouver, and I kind of know how large Stanley Park is. And so I'm just going to do it in that way. And then you'd start breaking down, okay, a golf ball is, roughly this big, and then you give the area of the golf ball or the volume. And then you just go on and on and on. And you just kind of try layer piece after piece after piece.
Yeah. Can I ask you my favorite interview question?
Mm-hmm.
This one always gets me. Meeyeon, what would you say is your biggest weakness?
Oh my gosh. This is the one that people like to always kind of package up into a strength.
Yeah, there's a few strategies, but
I overcommit, and I just take on too much. Oh, yeah. That's the worst one is I'm a perfectionist, right?
Yeah.
The idea
that's where I'm going with this.
That.
Let's give some advice to our listeners.
I'm a perfectionist. Often what that comes off at is that I'm late on my timelines. That's how I kind of hear it. When someone says oh, I'm a perfectionist, I would hear it as sometimes my deliverables are late. And they are late
because you're putting too much work in. Interesting.
I'm putting too much work into it. And so the way that I kind of would hear that weakness is as sometimes you just don't know when to let go.
Fair enough. Yeah. But interview prep, always a challenge.
I haven't had to do that one in a long time. What do you say is your weakness? I'm trying to think what I would say is mine today.
I probably should have thought of that before I asked you the question in anticipation of having it flipped around. I don't know. I would say structurally, you want to answer something honestly. The perfectionist answer that you suggested, I read it a different way. I think that's someone saying I don't have any flaws. If anything, I try too hard and I succeed too much, and they try to pretend like it's a weakness. I don't know if I was really being introspective though. I do sometimes struggle with multitasking, and you probably want to be careful about how forthcoming you are with that response at an investment bank. But it's good to know, right? And I say that because, so I have an analogy. I think everyone sort of thinks and operates like a vehicle, and everyone's a different type of vehicle. And some people are motorcycles and they can like start and stop and change directions really quickly. And I consider myself more of like a Mack truck. So it takes, yeah, it's a little funny, but like it takes me a while to get going. But when I do, I get up to speed really quick. I make a lot of progress.
Oh my God, this is an amazing answer for anyone.
But don't force me to like pump the air brakes, because it's going to take me a while to get back on if I'm totally derailed. That's something that I know about myself. So I try to like schedule accordingly. I don't know if that's a weakness or not, but I guess the broader point is like, just, it's good to be introspective, and it's good to acknowledge that people have strengths, people have weaknesses. And I think the best way to answer that question is just to say, what you're doing to sort of work on it. Yeah. And so I would say, because of this Mack truck analogy, I try to time block as best I can. Like I try to not have, if I need to have 4 meetings in a day, those are terrible days, but I try to have them in a row so that, you make it earlier or late, and then you've got kind of a block of time to be creative and focus on other things, rather than going like into a meeting and then you got 45 minutes and then, another meeting. So does that answer your question?
That's such a great
Now that you're
analogy.
Interviewing me?
I love it. I'm going to recycle it.
Are you a motorcycle? I feel like you're a motorcycle or a different vehicle.
I think I'm good at multitasking, but I think that truly like every single person is best at like monotasking. I think everyone does better when they are, they have time dedicated to one focus, one project, and they will do better work if that is the case. When it comes to multitasking, I think certainly some people are like far, far better at it than others. But I would say I'm probably like, I'm like a sedan. Like, I can maneuver here and there, but okay. I'm not going to maneuver as quickly as a motorcycle. I definitely do better like by like blocking things out, having dedicated time, and like getting in the saddle for like 15 minutes before I could power through something, rather than like doing 5 minutes of it here, 5 minutes of it there.
A sedan. Great. Classic answer.
But that's such a great answer to that question. Because I've heard a lot from a lot of interviews, the one that I get is like the whole perfectionist thing.
Yeah, it's the worst answer. Anyone listening, like, don't say it, please.
Don't say it. Yeah, the only thing that I hear is that you will take too long to do certain tasks, and they'll eventually have to kind of like push you.
Yeah, not hiring that person. One final question. I try to ask everyone. I sometimes forget. If you weren't doing this VP content at CFI, what would you be doing?
Struggling. No, just kidding. In Vancouver, so given where I am, I think I would be trying to start something of my own that would be software based, and it might actually be in the wealth management space.
Interesting. Very interesting.
I think it's a great time to be in kind of like software development generally still, even with like the fruition or the up and coming of AI. But I think that's what I'd be doing. I think I would probably be trying to make something of my own.
That was actually that was a really good answer. I should have clarified. You could have said anything. You could have said like the princess of whatever.
Oh,
like
my
it was
gosh.
like completely, it was like anything you want. But it's still a really good answer.
If money grew on trees, I would be an equestrian.
Okay, there we go. So now we got the realistic and the money doesn't grow on trees version.
Yeah, money doesn't grow on trees.
That's awesome. Meeyeon, listen, thank you so much for your time. That was a really fun chat. Really appreciate your time.
Of course, anytime. You know where I am.
That's true. Just down the hall here at CFI headquarters.
Thanks for listening to this episode of Net Learnings. This podcast is powered by CFI, an organization on a mission to enhance the skills, knowledge, and productivity of finance and banking professionals. If you enjoyed what you heard in this episode, make sure to follow Net Learnings wherever you listen to your favorite podcasts, or visit us online at corporatefinanceinstitute.com/podcast. See you next time.